Good morning, ladies and gentlemen, and welcome back to Finews TV. Today we are taking a closer look at the supreme discipline of Swiss banking, or wealth management, private banking. As we all know, Switzerland's financial center is fiercely competitive, facing mounting pressure from rivals such as Singapore or Dubai. That makes it all the more fascinating to analyze who's winning and who's losing in Swiss banking. And that's precisely what Chris Künzle, founder of Zurich-based firm Fin21, is doing. He's conducting a scientific study for the annual reports of Swiss private banks, delivering what is arguably the most accurate assessment of the industry. I am therefore particularly pleased to welcome him to the studio today and to find out which bank currently holds the title of Switzerland's best private bank in 2025. Chris, welcome to the Finews studio. You have been reviewing the annual results of the Swiss private banks for the fourth time in your study. Tell us right away, which is the best Swiss private bank in 2025?
Hello, Claude, and thank you for this conversation. So right off the bat, I can tell you that this year's award for Best Private Bank in Switzerland and Liechtenstein goes to the American bank Goldman Sachs.
That's quite a surprise, an American bank showing the Swiss institutes how to be successful. How do you explain this phenomenon?
That was indeed quite a surprise to us. I'm not sure if one may draw geopolitical conclusions from this fact, but the fact that an American bank like Goldman Sachs seems to be showing us the way in private banking is quite remarkable. Our study is very fact-based, very descriptive. We describe the status quo in quite some detail, but we typically refrain from too many judgments. Now, what stands out in Goldman Sachs' case is its very strong growth in terms of assets under management. So, on a base of around 25 billion AUM, over 4 billion net new assets have been acquired, which is quite substantial. It's a remarkable success. And with that, the bank not only won the prize for Best Private Bank, but also for Strongest Growing. So 2 awards for Goldman Sachs this year. The bank is also well positioned in terms of capitalization, which is important to clients, a 4th overall rank. There seems to be improvement potential around efficiency and profitability. It looks like the returns on their assets under management are not at par with some of their peers, which could, my hypothesis, it could be larger portfolios of ultra-high net worth individuals with bargaining power. And the personnel expenses of Goldman Sachs seem to be quite substantial, amongst the highest in the industry. Now, that's good news for employees, but less so for shareholders.
Overall, how would you describe the shape and the constitution of the Swiss private banks in 2025, and where are the weaknesses?
Yeah, I think there's sort of 2 key themes or weaknesses that stand out in this year's edition. A real lowlight certainly have been the very low inflows of net new assets. This year, again, lower to prior year. A median bank in our study nowadays attracts around 1% of its AUM base in terms of new money, which is just not enough. So a lot of banks seem to be running a farming business, but not actively going after new clients. Mm-hmm. And that combined with a very high cost base and particularly high salaries. Now I personally think both in combination may not be sustainable in the midterm. So without growth, those high Swiss salaries may come under pressure.
Mm-hmm. You have also presented several awards in subcategories, like the most efficient bank, the strongest growth financial institute, or the most efficient one. What can you tell us there?
Yeah, there's interesting dynamics across those categories. So for instance, in growth, there seems to be little persistence year on year. Those rankings vary quite substantially, which means no bank seems to have cracked the magic formula for longer term, consistent growth. In terms of capitalization, it looks more stable. That also makes sense. That is not something that an institute would touch year on year. And in terms of efficiency, there's a number of players that continue standing out with their unique client and business models. I'm thinking of a Skobag in Basel or Martin Ebner's BZ Bank, BZ Bank, which have quite substantial AUM with very lean operations.
On the flip side, which institutions are most at risk?
Yeah, in our study, we still count around 25 institutes with less than 5 billion Swiss francs of AUM. Now 5 billion is a huge number to the layman. In private banking, it's nothing. And I think there may be an ongoing consolidation in that segment. I'm sure there's some real gems. A couple of institutes continue to deliver exceptional results. They have a clear strategy, are well run, have a clear business model, a focused clientele, and continue delivering strong results for both clients and shareholders. So those are on the safe side. But there's also a couple of what seems to be troubled cases that don't seem to be growing, that have far too high costs for their size. One also wonders how big is the investment backlog in IT or digitalization, all topics that we cannot directly measure, but that will be absolutely crucial for long-term success.
In the study's foreword, the Swiss finance professor Martin Janssen notes that without UBS, Pictet and Julius Baer, the remaining private banks' assets are quite modest. Should we worry about the importance of the Swiss financial center?
Yeah, indeed. I have to fully agree with Professor Martin Janssen on that one. Following the downfall of Credit Suisse, the concentration has certainly accelerated. So UBS now accounts for around 2/3 of assets in our study. And if we take the top 20 players, we are at 95% of assets under management. And behind, there's a long tail end of smaller players. But if we take away our top global players, I'm sure we would still have a very vibrant and diverse private banking scene. But globally and as an international financial hub, we would be nowhere. And there's other studies comparing the wealth centers, and the air seems to be quite thin, and the competition fierce between the UK and the US and Switzerland and Singapore and many others. But without our global players, we would certainly not be playing in that league anymore.
In your opinion, if not Switzerland, where do wealthy families and individuals invest their money nowadays?
Yeah, I'm sure that is the million-dollar question for many ultra-high net worth individuals. I'm hearing positive signals for Switzerland as a hub with all the geopolitical turmoil going on and all the economic crises we have, that could be a bit of a tailwind for us. Many wealthy clients seem to be asking themselves, do I really want to book in the US with all the political risk, with all the question marks around the dollar and the public debt and a partly erratic administration? Do I want to go to the UK with all its structural problems? In Europe, I may go to Luxembourg, but that's a lot smaller and more specialized. So at the end of the day, I don't have too many choices. And I think that's partly good news for Switzerland. Specifically, I'm hearing about positive inflows from France and Germany, so our immediate neighbors, where a lot of wealthy citizens seem to be worried about the public finances and even the future of the euro, and gladly send their money to us, which is good news for us. So overall, I think old Europe may not have created a significant amount of new millionaires over the past decades, but there seems to be a large pool still of existing assets willing to come to Switzerland.
Let's talk about young, ambitious private bankers. On what should they focus now to be successful?
Yeah, I would certainly focus on education and continuous education on the one hand, and on the other hand on technology and specifically artificial intelligence and how to use that wisely and intelligently in your day-to-day job. I'm sure that is going to transform private banking quite substantially over the next decade. In addition, I think I'm still bullish on Swiss private bankers in the long run. Even our very traditional and sort of old-fashioned qualities, I think, are still very much here to stay and very much a secret for success. So a typical Swiss private banker is well educated, often speaks many languages, is trustworthy, is discreet, has good people skills, etc. So all things that have made us so successful in the past decades, and I'm sure that is very much here to stay.
Your study offers definitely a lot information and data. In fact, how did you come up with this analysis?
Yeah, I was actually a consultant to private banks for many years and was always surprised about the lack of hard data in this industry. Many banks were desperate for data and we could not always deliver. And as a consultant, I often used the famous Swiss retail banking study by Andi Dietrich from University of Lucerne. And at some point had the idea, why not apply this same scientific approach to private banking, which has worked nicely.
You have been presenting the results of the private banking study recently in Zurich at the prestigious event. Now, on your website, you already announced another big event, the Independent Wealth Summit on March 18, 2026. What can we expect then?
Yeah, that is indeed a new format we have launched jointly with Aquila, the well-known platform for independent asset managers. In many ways, I believe the market for independent asset managers is comparable to private banking. A lot of assets, a lot of transparency, a lack of transparency, but a lot of interest and not many hard data. And that is something we are trying to tackle. Another challenge we're facing is that few independent asset managers will publish their annual reports, which is why we're about to launch a Swiss-wide, nationwide study with the over 1,300 FINMA licensed external asset managers and hopefully shed some light on this interesting industry. And again, we're going to present the results at a flagship event in Zurich.
If I further check your website, Wealth Summit, I see that you have also interests in Asia and in the Middle East. What are you planning there?
Yeah, that would be a great next step, sort of a phase 2.0 maybe for our startup, if we could also scientifically analyze and review, say, Singapore or the United Arab Emirates, also hubs with significant interest that are not always as transparent as we would like them to be. I think particularly Singapore is for many Swiss private bankers a hub that they constantly monitor, and I'm sure we could gain a lot of followers and readers and also sponsors by reviewing that location. Now, as a startup, the challenge we're facing is that the research is quite time-consuming and not really scalable. So ideally, we would find some local partners to support us.
Keeping in mind that, especially in the financial services industry, there are already so many events and conferences, why does your summit find so much response?
I think the simple answer would be exclusivity. It all comes down to the highly selective approach we're applying when inviting guests. So this is really reserved for top-level industry leaders. So we invite members of boards of directors or C-level or managing directors. And I think that type of audience values the high profile of the event, which is a forum for exchange, sort of a bit away from media and commercial interests. Now, in order to protect that arguably a bit elitist format, nowadays we have to reject many applicants and interested parties. But I'm quite convinced that this exclusivity is the secret to the summit's success.
That sounds very promising and exciting. Anyway, I wish you all the best and a lot of success with your further events. Thank you for coming to the studio, Chris.
Thank you very much, Claude. My pleasure.